Good morning to everybody. I am Nicholas Bornolis of Capital Inc., and I would like to welcome you to today's webinar. On April 17, the Office of Foreign Assets Control of the U.S. Department of Treasury published an alert to warn U.S. persons about the possible evasion of the Russian oil price cap. So we are going to have today a very timely discussion on this particular alert, and it will give us the opportunity to discuss not only the details of the alert, but also overall about the structure, implementation, monitoring, and enforcement issues related to the Russian oil price cap. In today's world, where energy security is a major theme, this particular issue, the Russian oil price cap, plays a major role. And we are delighted to have with us Claire O'Neill McCleskey, the Assistant Director of Compliance Office of OFAC at the U.S. Department of Treasury, and Mr. Bruce Paulsen, partner at Seward and Kissel, who are going to start with a discussion on this particular topic. In terms of logistics, after the discussion is over, we will be taking questions from the audience. And please submit your questions through the Q&A button at the end at the bottom of your screen. And Claire and Bruce will be addressing them. In closing, I'd like to mention that this webinar will be available for access to be accessed upon demand after the end of the live session. And again, thank you to everybody for being with us. Thank you, Claire. Thank you, Bruce. And I turn the floor over to you.
Thank you, Nick, and thank you to Capital Link for this opportunity. Claire, I'm going to get a little bit into this past Monday's alert, which is very interesting, but perhaps for the benefit of the participants on the call, let's maybe take a step back and talk a little bit about background. Participants are certainly aware that OFAC's Russian oil price cap policy was implemented on December 5th, 2022 for crude and February 5th of this year for products. And maybe tell us a little bit about what is the background and purpose of the price cap policy and how has OFAC implemented it?
Sure. Thanks so much, Bruce. And thanks to all of you for joining this morning. Very happy to be here with you all. I'm sure some of you have been at past events because, as we'll get into, we've done quite a lot of private sector engagement on the price cap compared to some of our other programs. So to sort of recap on the background of the price cap policy, a year ago, a little over a year ago, Russia illegally invaded Ukraine and as a result, roiled energy markets. And this left us in the US and in our coalition of allies with a real dilemma, which was that with higher energy prices, Russia was profiting from its own war and generating additional revenue that it could use to fund its war, which obviously was unacceptable. This left us with a really big policy challenge. So we needed to stop Russia from profiting from its war and from higher energy prices. We also needed to keep global energy markets well supplied and stable. And these goals were really in tension. So the price cap was devised with our allies to try and meet those two conflicting goals. As many of you are aware at the time, if Russia shut in a fraction of its oil, as markets were predicting would happen with the EU's 6th sanctions package, which involved a full services ban on services related to transporting Russian oil from Russia to third countries, emerging market countries especially would be very susceptible to shocks in the market and higher energy prices. And then Russia would benefit from that, right? So the remaining Russian exports would be sold at higher prices and they could maintain a higher level of revenue. So how were we able to design this price cap policy? It's because the coalition dominated the market for services that support the Russian oil trade. So the whole coalition has obviously banned the import of Russian oil. The US did this quite early through Executive Order 14068, and then the European Union, followed, banning crude oil of Russian origin on December 5th and products on February 5th of this year. But the reason the price cap policy is able to work is because EU, in particular, US, UK, our service providers provide very critical services related to the transport of Russian oil from Russia to third countries. So if Russian exporters or Asian importers want to use these best-in-class services, protection and indemnity insurance, ships, right, then they need to do that below the price cap in order to access these services. For those of you who are very familiar with OFAC sanctions, it's a very unusual program, right? Typically, OFAC sanctions are a full-scale prohibition, do not deal in this oil from this country or do not provide this kind of services. This is unusual, right? It's a service that you can provide if you meet a certain condition. So the oil is purchased at or below the relevant price cap. Many of you were involved as we were socializing this with industry, and people were skeptical. I can't blame them, right? This was very novel. I'll just say so far it does seem to be working. We have some updated data from the Russian Ministry of Finance that shows that following the imposition of the price cap, their tax revenues from oil and gas in the first quarter of 2023 were 45% lower relative to a year prior. And that includes a decline in March of this year in tax revenue of petroleum products of 85% relative to March 2022. And together with increased government spending in the war, this has produced a $33 billion deficit in their budget. They went into this year expecting they would have a surplus precisely because they expected oil prices to rise, which obviously there are a lot of factors involved in that. So I'll stop talking in a sec, but just in terms of implementation, OFAC implemented this as a service prohibition, as I mentioned, under Executive Order 14071, similar to how we've done other service prohibitions, accounting, trust and corporate formation services, quantum computing. And it's basically implemented as a service prohibition for certain covered services, trading, commodities brokering, finance, shipping, insurance, flagging, and customs brokering, if those services are provided to Russian oil purchased above the price cap.
Thank you. Yeah, people like me and others in the industry thought that this was going to be among the more complex sanctions regimes to administer from the government's end. But I think the way the guidance has worked out and the record keeping and attestation system has made this, I think, relatively simple for those providing services in this area. Maybe you could tell us a little bit how you got to that notion of record keeping and attestation.
Sure. So, as I mentioned, we did quite a lot of industry engagement on this as we were developing this policy, and a lot of engagement across different jurisdictions. So working very closely with our partners throughout the G7. And one of the things that we learned from industry was, the incentive to de-risk entirely was quite high, right? So people told us, hey, if we are concerned that we may in any way inadvertently violate these sanctions and face enforcement for that, or if there's a very high compliance burden, our incentive as Western service providers is just to say entirely, we don't want to touch this business, right? I mean, already people have different reputational risk concerns and sort of other factors at play. So we really took on feedback from industry about how the industry works, what everybody's role in the transaction would be, who's closer to price information, who would never even have price information in the ordinary course of business and find it really disruptive to get that information. And then we took in the feedback about de-risking and the calculus people would make. And then we designed the system so that, everyone is very clear about their role and their expectations and what kind of documentation they need to maintain or what kind of attestation or sanctions exclusion clause they need to use.
And is that how you got to the 3 tiers of knowledge? Maybe you could walk us through that a bit.
Sure. So the price cap guidance lays out a 3-tier system. And this is how people can access what we call the safe harbor in the guidance. So the safe harbor is if someone is following the compliance expectations laid out in our guidance and somebody lies to them, right? They provide them false documentation or information. Then what we've said is the person who would be the target of our enforcement action is that person who lied to you, not the service provider that did what we set out as the expectations for them. So the way the tiers work, we sort of think of it at OFAC as kind of a chain, right? And it's the closer that you are to the actual purchase of the Russian oil, then the greater the expectation that you will have the actual price document. So if you're a tier 1 actor, basically an oil trader, commodities trader, you're actually purchasing the oil, then you would be expected to retain documentation showing the price information, an invoice or something like that, versus if you are a ship owner or a protection and indemnity club, maybe I'll start with a ship owner, right? You'd be expected to have an attestation with whoever your counterparty is, right? So if you're a ship owner and you're dealing with a charterer, then you'd be expected to get an attestation from that charterer that says, I will not use the ship I'm chartering to transport Russian oil that was purchased above the price cap. If you're a protection and indemnity club, you might just be using your standard sanctions exclusion clause in your insurance policy to say to your ship owner members, if you use your ship to transport oil above the price cap, then you can lose your cover.
We'll move on to Monday's alert in a moment. But I see we did have one question from the audience wondering when the next guidance on the price cap could be expected. Of course, we just did have this alert on Monday.
Yeah, so we've just put out this alert. So I can't really say when additional guidance would be coming out. But one thing I would say is if people have questions for OFAC or there are areas that you feel that the industry could use additional guidance, we very much encourage you to submit that to us. We have a feedback line, or you can reach out to me and provide that information. It's not price cap specific. We're always happy to answer questions or requests for guidance on any sanctions program, but particularly, for price cap, please reach out and identify to OFAC any areas if you feel that the guidance is not clear, or you could use additional information from us.
Yeah, and as someone who advises people in the shipping industry on OFAC issues, I can say that OFAC is a user-friendly agency, and they will give you guidance. It may not be overnight, but you will get it, and it can be very helpful and keep people out of trouble. So tell us about Monday's alert, possibly starting with what prompted it.
Sure. So, we've said publicly before, if you've used one public report as a benchmark, we estimate that around 75% of the trade of Russian seaborne oil is occurring outside the price cap. And when I say outside the price cap, I mean it is not touching a G7 service at all, right? Which we've said all along, it's not a violation of the price cap if you have, a transaction that's totally outside of G7 services, because this is a prohibition on our service providers, right? So the remaining estimated 25% of transactions that use Western services under the price cap, there's two types of trades. There could be sort of only Western insurance or Western service providers, a Greek ship and British insurers. And then there could be a mix of coalition service providers and non-coalition service providers. We've said publicly before, we're not seeing widespread evasion of the price cap. Again, when I say evasion, I mean people, lying to our service providers to violate the price cap. But as in all of our sanctions programs, OFAC receives a lot of information that can feed into potential leads. This could be information from our foreign partners, information from law enforcement. An incredibly valuable and maybe the biggest source of information for us is the information that's reported to us by industry. These could be sort of formal OFAC reports, a report of a rejected transaction or a blocked transaction, or it could be a tip or a lead. People submit information to us about things that they have seen in the industry or things they're hearing or things that they've encountered. So specifically in this case with the alert, OFAC is aware of reports that ESPO and other crudes that are exported via Pacific ports in the Russian Federation, and we name Kosmino specifically, may be trading above the price cap, and they may, in some cases, be using covered services provided by U.S. persons. And these U.S. persons may be unaware that they're providing covered services involving oil purchased above the price cap, because these actors may be using deceptive practices or providing incomplete or false documentation. So we issued this alert to really provide sort of an additional warning to U.S. industry to be careful, when if you're dealing with ESPO or other Pacific Russian crudes.
And when you mean be careful, does that mean more due diligence than just taking the attestation?
Well, I think maybe we can get into a little bit some of the deceptive practices that we're seeing and what we were specifically sort of warning the compliance community about. Obviously, well, I'll say one thing at the outset, right? In terms of know your customer or your counterparty, we obviously understand that each actor in the chain is only going to have access to certain information, and they're only going to be dealing with certain parties. But one of the things that we consistently heard from industry, whether it was P&I clubs or ship owners or anyone really, is that people know who they're doing business with, right? And from just a business perspective, in terms of all the risk that people have to take into account when you are just going to do business with someone, right? And so if you know your counterparties or you know your customers, then you're going to know what is unusual behavior, or you're going to be on the alert for someone that maybe you're not used to dealing with. And this is someone that you don't know well, you don't have a history with, you know that you need to be a little more careful in terms of when they're submitting documentation. On the topic of AIS manipulation, obviously, this is something the industry is incredibly familiar with. This is nothing new. When ships are going dark for a period around a certain high risk area, that's, everyone knows, I think that's something to be concerned about. Specifically, in terms of what we are seeing that led to us issuing this alert, what we've seen is that sometimes there will be a discrepancy between what a very basic vessel tracking service shows and a more sophisticated vessel tracking service or subscription will show. So the very basic, you're talking like a free online vessel tracking will show that a ship was somewhere in the area around Cosmino, for example, but very clearly that they did not go anywhere near Cosmino. And then when you access a more sophisticated service provider or more sophisticated vessel tracking system, you can see clearly that that ship did in fact call at Cosmino. So if you're providing services to a ship and you find evidence that, hey, something is going on, they appear to be disguising the fact that they are calling at Russian ports. We want people to know that they should see that as evidence of possible evasion of the price cap. They should ask for additional information. You should press for documentation. And if someone refuses to provide that, then that should be, taken as possible evasion and ideally, reported to OFAC.
Yeah, I see that one of the recommendations in the alert is the use of maritime intelligence services to improve detection of AIS manipulation. And are you saying, so if you go online and you get the free service, that's perhaps not enough, that you should perhaps subscribe to one of these services? And there are a number of them out there.
Yeah, I mean, obviously we're agnostic on the OFAC side about service providers, but these, there is a wealth of information available via these tools, and sort of the same way that there's all kinds of due diligence and enhanced due diligence tools on the banking side that financial institutions use when you're talking about higher risk activity. These kinds of intelligence services do provide additional information. And in this case, we have, very clear examples of, okay, this is showing you one thing that appears to be more accurate than what you're going to get with, very basic information.
Yeah, I would commend to the audience the 2019 compliance guidance from OFAC, which in fairly brief fashion goes through the basic due diligence obligations, and also references that the compliance program should be relative to the size and sophistication of the company that's conducting it. And I know that ship owners are often concerned about cost, but the cost of getting in trouble often far exceeds the cost of taking diligent steps, such as employing one of these maritime intelligence services. One of the questions that's popped up from the audience, and I think you perhaps have already touched on it, are what are financiers to do in this situation, people who finance shipping operations?
That's a great question. So one of the things that our guidance has made very clear about is that the covered service under the price cap is finance, and that means financing oil purchases. So trade finance for oil, that's the covered service. So if you are a financial institution and you are providing financing, well, I'll give you sort of two examples because I think it can be sort of dependent on the specific activity. If you're a financial institution and you are extending, for example, a revolving line of credit to an oil trader, right, that's engaged in the purchase of Russian oil, the expectation would be, because that's not a sort of per trade, right, line of credit, this is just general financing, the bank would be expected to get an attestation from the customer that says, you know, I'm not going to use this line of credit to violate the price cap, right? If you're a bank and you're actually financing a specific trade, you know, a specific purchase of oil, then as we lay out in the guidance, there would be an expectation that you would retain information showing the oil was purchased below the price cap, because in the ordinary course of business, that's information that the bank would be collecting, right, as part of trade finance. We've been very clear in our guidance that solely processing intermediary transactions, if we're talking, you know, for example, correspondent banking, there's not an expectation of any additional due diligence or requirements for the price cap, right? The covered service here is trade finance.
Another question from the audience. The question says, the alert release said that OFAC is aware of reports that ESPO is being shipped above the cap and may be using services provided by U.S. persons. I'm not sure you can answer this, but has OFAC contacted U.S. persons, and is OFAC considering any action involving it?
Fortunately, I can't answer that one directly, but I will just say that you know, as I mentioned before, information that's reported to us directly by U.S. persons is a very important source of information for us, and we obviously are conducting quite a lot of industry engagement and outreach in this program. And I would just encourage folks, you know, if you have any uncertainties, even for example about whether something should be reported to OFAC, just get in touch with us.
The alert emphasizes that U.S. persons providing covered services are required to reject participating in an evasive transaction or a transaction that violates the price cap, and to report such transactions to OFAC. Can you talk a little bit about the reject and report requirement?
Sure. So maybe I'll mention again, sort of the safe harbor, right? So the price cap guidance establishes a safe harbor from OFAC enforcement for U.S. service providers that comply in good faith with the record keeping and attestation process that we describe in the guidance. And it allows each, you know, party in the chain to demonstrate or confirm that the oil or the petroleum products were purchased at or below the cap. And so to be afforded to access that safe harbor, there's a couple requirements laid out in the guidance. So one is U.S. service providers have to retain the relevant records for 5 years. This is in accordance, you know, with our regulations. And in the event that they are asked to participate in an evasive transaction or a transaction that would violate the crude oil determination, to access the safe harbor, they need to report that transaction to OFAC. So how does that work? Perhaps, you know, people have never reported a transaction to OFAC before. It's something obviously our financial institutions are extremely accustomed to. We actually have online an OFAC reporting system. And this is a system online that you can submit a report to OFAC. You can also just email it to OFAC reports. You can find it on our website. You can submit that to us. We have a couple different forms online. Again, I would say if you're unsure of whether something should be reported to OFAC, perhaps it's not a transaction that someone asked you to identify in, but it's, or to engage in, but you're aware of it or something. I would encourage you again, just to get in touch with us, and we can provide additional guidance. Like I said, we do also take, tips and leads from folks that aren't required to report something because they weren't, participating in it. But that information can be really, really helpful to us.
I would again commend another OFAC publication to the audience, and that's the May 2020 guidance on deceptive shipping practices, which is really quite complete and compiles a number of bits of guidance issued by OFAC over the years into one place. But we have a question about, from the audience, that is there a plan to release an update to this publication, which is almost exactly 3 years old?
That's a great question. I would say, we are continually assessing the guidance that we provide to industry to make sure that it's, up to date. I would really encourage folks, if you have thoughts or input on areas where you think guidance should be updated, or that certain red flags are maybe not as relevant for the industry anymore, that's a conversation that OFAC would love to have with industry. We do hear sometimes, oh, this area actually there's actually better tools, or this red flag is a little outdated because the industry has changed in this way. That's engagement that we would love to do. We always have, but particularly with price cap, we do a lot of engagement directly with the shipping industry. And so I personally would love, over the course of this year, to hear from industry about that advisory specifically, or about other advisories we've put out for the shipping industry.
Thank you. Another question says, the OFAC alert said, however, shipping, freight, customs, and insurance costs must be invoiced separately from the purchase price of the Russian oil and must be at commercially reasonable rates. What is commercially reasonable?
Very good question. And, people have asked us sometimes, oh, are you going to publish a rate limit or something like that? Again, to sort of turn it back around on the topic of know your customer, this is something that industry is going to know from doing their ordinary business, right? So you're going to know if somebody is claiming that they paid, a freight rate that's completely unreasonable, or vice versa. You'll know that, oh, rates have been at historic highs. And, if you'd asked us a year ago, this would have been really unreasonable, but this is, completely normal because of market conditions. I would say, you are the experts, you're in the industry. And so you're going to know if something is unusual, is out of step with all the other business that you're doing, and just feels like it is, abnormal and out of step with standard business practice.
Yeah, having advised companies in this space for many years, people do know that risky business pays a premium. And when you see that premium, it's a big red flag. So I think that just complements what Claire just said. More questions from the audience. How should owners and insurers treat information that current oil price indices show that ESPO and Urals are both trading above crude oil price cap in the context of their obligation to conduct customary due diligence?
I think, obviously, price information that's reported sort of in the market, right, is aggregate, right? It's based on reports that pricing services are collecting about trades. I would say, if you know that a particular grade, or for example, now that we've put out this alert, we're saying that there are reports that ESPO and other Pacific crudes are trading above the price cap. then that is a reason to, exercise care, make sure you're carrying out all your proper due diligence procedures, just making sure that you are doing everything that we lay out in the guidance as expected in order to obtain the safe harbor.
And another question is, will OFAC release new oil price cap prices in light of changes in the market for Russian oil products?
Sure. So, as we've said publicly with our coalition, there is a process for evaluating the price going forward. And, we've said also if we were, ever to do that, we would, provide some kind of wind down period and then publish a new determination with a new price. I can't comment on where the price or the market or anything will go in the future, but that's a process that's conducted with our coalition partners. I mean, I would just say from an implementation perspective on the OFAC side, it's not something that, you're going to wake up, tomorrow morning and there's going to be a new price with no notice to the market or no wind down or anything like that. It would be implemented the same way that we did with the initial price.
And going a little bit afield, because the audience may be interested in the February guidance and the guidance back before the implementation of the crude price cap in December. The notion is that the price cap applies through the first landed sale. And if the oil or the products go back out on the water without being, quote, substantially transformed, the price cap still applies. I know that I sometimes hear, what exactly does substantially transformed means? Perhaps you could walk us through that.
Sure. So in the price cap context, we've put out some in our final guidance in February. We put out some additional information on this. So when you're talking about crude oil, once the crude has been refined, the price cap no longer applies, right? So if the crude is taken on shore in a particular country and then it's refined into various products, the price cap no longer applies. So you could import the oil, the crude into a particular country, refine it, and then ship, the gasoline or whatever else, back out, including on the water, and the price cap would not apply. Of course, the refining has to happen, I should say, in a jurisdiction other than the Russian Federation. For petroleum products, what we've said is for the purpose of the price cap regime, if petroleum products are brought onshore in a jurisdiction other than the Russian Federation, and they are blended such that there is a change in the tariff code, so it's a new product, then the price cap no longer applies. If they are just sort of, you commingle two fungible products, there's no change in the tariff code, then the price cap would still apply, if they were taken back out on the water. But if blending occurs such that there is a tariff shift, then the price cap would no longer apply.
All right, one last question, and I think we conclude. We have a question about the dark fleet. And the question is, one issue in the past year is the growth of the Russian dark tanker fleet, which has implications for maritime safety. Does OFAC interact with agencies, US or international, concerning the maritime safety aspects of such Russian oil moves?
An interesting question. On the maritime safety topic, this is obviously not sort of OFAC's main area of expertise. I will say there's, many parts of the US government, from the, Coast Guard to naval intelligence, that are obviously interested in and sort of experts in this issue. I would say the only thing that from OFAC's perspective that I've noticed and that I've heard from industry is that, there's a lot of reporting about the dark fleet, and I think it's always important if you're making some conclusion or conducting some analysis about the dark fleet, that at the outset you define what you mean by that, because I think people sometimes use the term in different ways, particularly with price cap, right? It could just mean dark fleet, these are vessels that have very opaque ownership, right? So we don't sort of know what activity they're doing, but it's really hard to identify who owns them. And so we sort of assume that maybe there is a higher risk there because it's very opaque. Some people also use dark fleet to mean very specifically, ships that are known to have engaged in sanctions evasion in Iran, in Venezuela, in Syria. And I think in the case of the price cap, we just have to be careful because it could get a little confusing if we're talking about, as I said before, there's trade in Russian oil that occurs outside the G7 system. It doesn't touch G7 services, and that's not evading the price cap, right? It's avoiding the price cap system. And so I just think, if we're talking about the dark fleet, it's important to, make sure that we're being clear, what we're talking about here.
Claire, as we get to the conclusion, any final remarks that you have a big industry audience here?
Yeah, no, I would just say thank you to everyone in industry for the engagement so far, for all the candid feedback that we have gotten, for the many questions. I would just encourage folks to continue to reach out to us to identify if there are areas where you need additional guidance or, concerns that you're facing, anything like that. Our plan at OFAC is to continue to engage heavily, not just with, shipping, but with insurance. Obviously, we continue to engage with banks, with the oil industry. We want to understand, how sanctions implementation works on the ground, any challenges you're having, and needs for additional guidance. So just thank you, and expect to continue to hear from us in the future.
Thank you, Claire. That concludes our program. Nick, back over to you.
Well, thank you very much. It has been a very, very interesting and insightful discussion. Thank you, Bruce, and Claire, thank you for really providing all this information. I'm delighted that we had the opportunity to put together this webinar so quickly after the alert was issued, and we plan to continue with our webinar. So thank you to both of you for joining us. And as a reminder, this will be available for replay very shortly. So thank you very much.
Thank you.